We have three key messages this week. We are going to talk about portfolio performance, and then I'm going to talk a little bit about sentiment, followed by the US earnings season. January was a solid month for our portfolios. A typical balanced portfolio was up by 0.8% compared to our peers who experienced a fairly flat month. The underweight in gilts relative to equities contributed to our outperformance, as did our preference for credit fixed income and emerging market equities. So it's been a great start to the year. However, we don't want to be complacent, and this is a good place to take stock of where we are with regards to macroeconomic as well as company fundamentals. So on the macro side, global growth in 2016 was good, it was solid. But that was 2016, obviously that is now historic and behind us. We look at business sentiment surveys for forward-looking signals, and those have been good all the way around. As you know, the UK growth has been quite resilient and it has supported consumer spending. It's been resilient in Europe and in Japan, and in emerging markets it's been on an improving trend. Most importantly, it's definitely very good in the US, and we continue to monitor President Trump and his ability to sustain the feel-good factor in the economy and for businesses. Overall, the story is that it supports our overweight stance in equities and risk assets. So turning to company fundamentals, the earnings season has started. In the UK, the bulk of earnings will be reported in the middle 2 weeks of February, but in the US, 2/3 of the S&P 500 have already published their earnings, and the earnings are good. They're up by 5% in the fourth quarter of 2016, and surprises were to the upside. The earnings beats came mostly from the technology sector and the healthcare sector, which are two themes that we have in our portfolios. My colleague talked about the technology sector last week, so do go and have a look at that video. The healthcare sector hasn't had as good a performance. It's found some legs recently because there's been some loosening in drug approval regulations, but it has some way to catch up with the S&P rally. Nevertheless, the earnings season and good numbers should remind the market that this is a good, solid sector with solid fundamentals, which has a lot of bad news priced in already. Hence, incremental good news should see a response on the upside, and we continue to have good conviction in the trade.